Hey everyone, welcome back to Corporate Decoder. Today, IPVVU just filed a current report, and I'm seeing flexibility that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is making it easier for investors to trade parts of their units, and this filing tells us exactly how and when. So, we are looking at a Form 8K filing from InterPrivate Investment Partners V Incorporated. This is what we call a current report, meaning something important and timely happened with the company that they need to tell the public about right away. The key date here is the 23rd of July 2026. This is when the reported event actually occurred. The company itself is InterPrivate Investment Partners V Incorporated. They are a financial services company, and based on their IPO history, they likely started as a special purpose acquisition company, often called a SPAC. SPACs are essentially shell companies created to merge with another company, taking that company public. They were incorporated in the Cayman Islands, and their commission file number is 001-43,326. Their main office is listed as being in New York City. InterPrivate Investment Partners V has checked the box indicating they are an emerging growth company. This means they get some regulatory benefits like being able to phase in compliance with new accounting standards. They have not elected to opt out of the extended transition period for these standards, meaning they can take their time adopting newer accounting rules. Now, let's get to the core of this filing, which is under Other Events. What happened on the 23rd of July 2026 is that the company announced a change related to how their investors can trade their securities. Essentially, if you bought units in their initial public offering, you will soon be able to trade the different parts of those units separately. Right now, they are likely bundled together as a unit. Starting the 27th of July 2026, investors can choose to trade the Class A ordinary shares and the warrants individually. This is a common step for SPACs after their initial offering. Let's break down what a unit is. Each unit is made up of one Class A ordinary share and 1/3 of a redeemable warrant. Now, a whole warrant gives the holder the right to buy one Class A ordinary share, but it has an exercise price, meaning you have to pay $11.5 to buy that share using the warrant. This is a pretty standard structure for units offered by these types of companies. This is the practical part for investors. If you hold the whole unit, it will continue to trade under the symbol IPVVU if you decide to split your units into the individual shares and warrants. The Class A ordinary shares will trade under IPVV, and the warrants will trade under IPVVW. This gives investors more flexibility to trade based on their investment strategy. They can bet on the stock itself with IPVV or on the warrants with IPVW, which are often seen as a more speculative play. To actually make this separation happen, investors need to work with their brokers, who will then contact the company's transfer agent, Continental Stock Transfer and Trust Company. This is the administrative step to get the units broken down. Finally, under the Exhibits section, the company has attached the press release that announced this news as Exhibit 99.1. This is what provides the official statement to the public. This press release is where all the details about the separate trading have been formally communicated. Looking at this filing, the big takeaway is increased trading flexibility for investors. This is a very common and expected move for SPACs after their initial public offering, and before they've announced their target merger, allowing separate trading of units, shares, and warrants can sometimes add liquidity to the market for these securities. For investors, it means you can now choose to invest in just the share, just the warrant, or the combined unit, depending on your outlook for the company's future acquisitions. Think of it like buying a bundled gift basket and then being able to sell the cookies and the candles inside separately. It gives buyers and sellers more specific options. Historically, companies that offer this kind of flexibility often see a bit more investor interest as it caters to different risk appetites. While this filing doesn't give us deep financial numbers, it signals a step toward more active trading and potentially prepares the ground for future corporate actions, like a merger for this SPAC. The risk I am watching is how the market will react to the individual trading of these components, and whether that leads to increased volatility or clearer price discovery. What I am actually looking for is how this impacts the potential for IPVVU to eventually merge or acquire another company, as that is the core purpose of a SPAC. If you found this breakdown helpful, hitting that like button and subscribing will really support the channel. All the research tools I use are linked in the description below. That is my take. Stay decoded, like, comment, subscribe, and join our Discord community.